What if I told you that $100 is all you need to start building a life of passive income? Most people think you need thousands to start, but the secret isn't in the amount, it's in the system you build. Today, we're breaking down the exact step-by-step roadmap to turn that single bill into a recurring monthly paycheck. We'll cover everything from safe cash reserves to high-growth digital assets. No fluff, just a clear execution plan. Phase 1, laying the foundation. Before you chase high returns, you need a place for your money to work. Starting with $100 means choosing tools that don't eat your capital in fees. Accuracy and efficiency are key. You aren't just investing money, you're installing a financial infrastructure that works while you sleep. The shift from consumer to investor happens the moment you decide that your money should work harder than you do. Even a small amount, when placed in the right vehicle, triggers the most powerful force in finance: compounding. Let's dive into our first strategy, the world of dividend stocks and fractional ownership. Strategy 1 is dividend investing. This is where companies literally pay you for owning a piece of their success. With fractional shares, your $100 can buy a slice of the world's most expensive companies. Choose a brokerage like Fidelity or Schwab that offers zero commission trades. Every cent of your $100 must go to work. Focus on dividend aristocrats, companies that have increased their payouts for over 25 consecutive years. Enable the Dividend Reinvestment Plan, or DRIP. This automatically buys more shares with your earnings, accelerating growth. Diversify. Don't put all your money into one stock. Use ETFs to spread your $100 across hundreds of companies. Patience is your greatest asset here. In the beginning, the dividends will be small, but they are the first bricks of your wall. Your goal is to build enough shares so that every month, a new deposit lands in your account without you lifting a finger. Understand the risks. Market volatility is normal. Stay focused on the income yield, not just the daily stock price. Dividend stocks are the classic passive income engine, but there are even safer ways to start. Let's look at cash reserves. Strategy 2, high-yield savings accounts. This is the safest way to earn a return on your first $100. Traditional banks pay almost nothing. High-yield accounts can pay up to 5% annually, or more. The beauty of an HYSA is liquidity. Your money is safe, insured, and you can access it whenever you need to. Always ensure the bank is FDIC insured. This protects your capital up to $250,000. Most high-yield accounts compound interest daily. Even on $100, you'll see growth every single month. Set up an automated transfer. Even $5 a week on top of your $100 will dramatically change the outcome. While it won't make you rich overnight, an HYSA helps your cash keep pace with inflation better than a standard account. It's the perfect place for your emergency fund while you explore more aggressive passive income strategies. Now, let's step up the returns. What if you could be the bank? That's where peer-to-peer lending comes in. Platforms like Prosper or Groundfloor act as the middleman, vetting borrowers and handling the payments. Platforms like Prosper or Groundfloor act as the middleman, vetting borrowers and handling the payments. Don't lend all $100 to one person. Diversify by putting $25 into 4 different loans to spread the risk. Returns can be significant, often ranging from 6 to 10%, depending on the risk level of the loans you choose. Every month, you receive a portion of the principal plus interest, which you can reinvest to keep the cycle going. Be aware, borrowers can default. This is why diversification is non-negotiable in the P2P space. Some platforms focus on real estate, allowing you to fund property renovations and earn a share of the profit. Once you set your criteria, many platforms offer auto-invest features, making this a truly set-and-forget strategy. We've talked about investing money. Now let's talk about investing $100 into an asset you create. Strategy 4, digital products. This is the build once, sell forever model of passive income. Use your $100 to buy a domain, basic hosting, and a few design tools like Canva Pro. Create something once, like a Notion template, a budget spreadsheet, or a printable checklist. List your product on platforms like Etsy or Gumroad. They handle the transactions and delivery automatically. Since there's no physical inventory, every sale after you break even is pure profit. It's incredibly scalable. The key is to solve a specific problem. People pay for convenience, organization, and time-saving tools. Use free social media traffic to drive eyes to your product. Your $100 investment is the foundation. Your time is the fuel. A good digital product can generate income for years with minimal updates, making it a powerful long-term asset. If you'd rather promote existing products, Strategy 5 is for you: affiliate marketing and content. Affiliate marketing is simple. You recommend products you use and get a commission when someone buys through your link. Use your $100 for a basic microphone or lighting to improve the quality of your content reviews. Choose a niche you actually understand. Authenticity is what builds the trust that leads to clicks. Start with Amazon Associates or niche-specific affiliate programs that offer higher commission percentages. You don't even need to be on camera. Faceless channels use stock footage and voiceovers to deliver value and earn ad revenue. Content is a volume game. The more helpful reviews and guides you create, the more digital real estate you own. Once you hit the monetization threshold, your content starts earning AdSense revenue on top of your affiliate commissions. The real magic happens when you stack these strategies. Use your digital product income to buy more dividend stocks. Let's review the path from $100 to a significant monthly passive income stream. Step 1. Take that $100 and put it into a high-yield savings account or a brokerage. Step 2. Buy fractional shares of monthly dividend-paying stocks or broad index ETFs. Step 3. Reinvest every single penny. Use DRIP to grow your ownership without adding more cash yet. Step 4. Use some of your $100 to build a digital asset that leverages your skills for higher margins. Step 5. Funnel the active income from your digital assets back into your passive stock portfolio. This creates the snowball effect. Your assets start buying more assets, and your growth goes parabolic. This isn't a get-rich-quick scheme. It's a get-rich-for-sure system that requires time and discipline. Remember the 4% rule. To earn $100 a month passively, you eventually need $30,000 invested. But you don't need $30,000 to start. You need $100 and a decision to begin today. Avoid the common mistakes. Don't chase high-yield traps that offer 20% but risk your capital. Don't jump from strategy to strategy. Pick one, master it, and then expand. Focus is your superpower. The habit of investing is more important than the amount. Consistency beats intensity every single time. Keep your account secure. Use two-factor authentication and strong, unique passwords for every financial platform. Continue your education. The more you know, the less risk you take. Read, watch, and learn constantly. As your income grows, consider tax-advantaged accounts like a Roth IRA to keep more of what you earn. Compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. Celebrate the small wins. That first 10-cent dividend is proof that the system works. It's the proof of concept. Once you've turned 100 into 110, you've learned the skill. Now, it's just about scaling. Time is the one thing you can't buy back. The earlier you start your passive income engine, the better your future self will be. Passive income isn't about being lazy. It's about having the freedom to choose how you spend your one life. Have you opened your account? Have you picked your first asset? Don't leave this video without taking one action. That first click is the hardest. After that, the momentum of the system takes over. Financial independence isn't a destination. It's a series of small, smart decisions made over time. Let's take a deeper look at the specific platforms that make this $100 strategy possible today. Robinhood and Fidelity are pioneers in fractional shares. They allow you to buy as little as $1 of a company. Acorns is perfect for beginners. It rounds up your daily purchases and invests the change into a diversified portfolio. Fundrise allows you to enter the world of commercial real estate with just a small initial investment. Gumroad is the easiest way to start selling your digital products without needing a complex website. If you have a skill to teach, platforms like Skillshare can turn your knowledge into a recurring royalty stream. Each tool serves a purpose. The key is to use them together to create a resilient, multi-stream income source. We must be honest, turning $100 into a full-time income takes years of consistent effort and reinvestment. But the curve is real. What feels like slow progress for years suddenly becomes explosive as the math takes over. You have the knowledge, you have the platforms, and you have the $100. The only missing piece is action. Don't wait for the perfect time. The perfect time was yesterday. The second best time is right now. Your future self will thank you for the decision you make today. Start your passive income journey now. If you found value in this guide, share it with someone who needs to hear this. Let's grow together. The world of finance is changing. Stay informed, stay disciplined, and stay focused on your goals. $100, one decision, one step at a time. This is how you change your financial story. The math doesn't lie. The systems are ready. The only question is, are you? Thank you for joining us on this deep dive. Your path to passive income starts today. Build your foundation, scale your assets, reinvest your wins, and watch your freedom grow. Stay tuned for more guides on building wealth from the ground up. Goodbye for now. The spark is lit. Now fan the flame with consistency and time. Success is inevitable. Your journey begins now. We'll see you in the next one.